Welcome to Nasdaq Trade Talks. I'm your host, Jill Mellon. Allergies, excuse me.
No problem.
Welcome to Nasdaq Trade Talks. I'm your host, Jill Mellon, global markets reporter at Nasdaq. Joining me on Friday, as always, to wrap up the week, we have Chris Dearborn. He's Nasdaq's Market Intelligence Desk Managing Director, and it has been quite a week for you guys as we've been running through all of these earnings. The highlight here has been tech, as we can certainly see on this NDX chart.
Absolutely. It's been a stupendous week for markets. Volume has been super light, yet we're seeing all-time highs in a number of different stocks, a number of different indexes, and what's really driving that market.
Right. And these 52-week highs that we've seen hit, that could potentially be an inflection point?
Absolutely. So what you're looking at is really what's the breadth of the market. And Brian, my colleague yesterday, talked about the S&P 500, and he showed the breadth of the market on a weekly basis. And what he was looking at was the number of stocks making all-time highs and where the market inflection points were actually at for the S&P 500 broader index. So what you're looking at there is a number of times that high index points could be really an inflection point for the market where you're starting to see some exhaustion, especially if it's a high number of companies making a 52-week high and then no follow through after the fact.
Right.
When you have a number of stocks making 52-week highs on a day-over-day basis, you're showing that it's a well-formed rally with a lot of legs to it. Kind of like going with that Goldilocks mentality that we had back in 2016-17, where the markets kept making higher highs on lower volume. Because when you have less volatility, and the VIX is a perfect way to gauge this, you have a 12.85 handle on the VIX, I mean, you're under 13. There's no volatility in the market at the moment. And what you're seeing is investments continue to move into stocks, especially the large cap names. And as the large cap names continue to move higher, you're going to see those stocks make higher highs on lower volume. And eventually you're going to see some of these stocks start to rotate through. And on that rotation, you're going to see the other sectors make up higher highs, while some of those leaders will start to plateau out a little bit as people take profits and the market start to solve for that sector. Yet that means the other sectors need to pick up, and that's what you didn't see in some of the S&P 500 sectors that Brian pointed out yesterday, but we are seeing a little bit more of that today, which makes us think that potentially, barring any macro news, any black swan, anything that could really kind of inflect this market down, you're going to see a little pause and then higher highs again.
All right, well, let's go back to this NDX chart over here. I mean, we continue to hit record levels every day. No surprise. Tech earnings they've been very good, not great, but very good. Again, a sector of the have and the have-nots is your software services. If you're in the enterprise space, like a Microsoft, like an Amazon, those that have been investing and putting money towards R&D, you're starting to see that growth certainly be rewarded, and investors are looking for those growth names. Even as large as they may be, you're still seeing those flows there. You
absolutely are. So the Nasdaq 100 index is what we're looking at here today. It is it's a day-over-day chart, daily chart, and what we're looking at is significant price movement that kind of mirrors most of the indexes that we've seen, most of the markets that we've seen, especially through 2016, through 2017, which we have here. You can see the sell-off in December of 18, and then the significant rally here. And with the Nasdaq 100 comes all those leaders that you get in the Dow Jones Industrial, the S&P 500, some of the largest market cap names out there, Apple, Amazon, Google, et cetera, Microsoft. Can't leave out the other trillion-dollar baby there. Right. So what you're looking at is higher highs in the stock and breaking out above the Q3 highs that we made. Which, remember, all indexes made Q3 highs. Some even made a higher high at the beginning of Q4 in early October before the sell-off over November and then the drop-off of Christmas Eve. Santa's a little present for the market. And what you're looking at here on the bottom is higher highs or 52-week highs or even for all the members. And you were talking about the peaks and the highs, and this mirrors the S&P that Brian showed, but Brian showed a weekly chart yesterday. On this daily chart, you're looking at how many stocks made higher highs, and you had nearly 40, and then the market sold off because there was no follow-through on other companies and sector rotation. So it was a handful of stocks leading the market higher, and that's the key there. It's a handful of stocks. Here, again, March, we started to rally. We made a higher high, but then that dropped off again because it was a handful of stocks, namely tech again. So what you're seeing here is a broad-based rally over the summer of 2018 with multiple stocks making higher highs and that rotation going through. Sell-off, clearly nobody coming. And what you're seeing here through Q1 and into the Q2 start is multiple stocks making higher highs on a consistent basis. Yet, what do you notice? The Nasdaq 100 is trading even higher.
Well, it looks like there's a bigger grouping there with a little bit more follow-through as well, compared to just that spike that you saw in the earlier part.
Nobody likes spikes. Spikes are a sign of extremeness one way or another which means either it's an overbought or an oversold
And
condition.
it seems like the market lately, or this year in particular, and even into 2018, we no longer kind of have those ebbs and flows in the markets. It's either one direction all the way up or one direction all the way down, and you can see that clearly on that chart over there. Now, the SOX.
Let's carry that
let's talk
over
about the
here,
SOX.
right? So Brian did another great job today pointing out in our daily note, for those who don't follow, you should absolutely follow this note. And what we're looking at here is the Philly Semi Index, or the SOX as it's familiarly called. And what you're looking at here is a number of the tech companies that have led these markets higher. And it's a weekly chart, and it's going back over that same time period. But what you're looking at here is a significant move that mirrors the move here in December of 2017. Again, the sell-off here and the lead higher. What's happening here is different, and this is why the NDX is such a good chart to look at. You're looking at the rotation top and a potential bearish topping pattern, depending on where the index closes today, of two significant moves within the index, which tell you that the index is getting toppy. Look at some of the earnings that are coming out today and some of the stocks that make up this index, right? You're looking at Intel, Intuit, a number of other companies that are starting to see maybe a little pause for the moment. You see people taking profits after this long run, and you
As you should, right? Yeah.
Absolutely, they're doing exactly what you should. So what does that mean? Are they going to put that money to work? Of course they are. And this is the sign that you're looking for here. You're seeing other stocks and other sectors making 52. Companies like Orly's, a Nasdaq 100 part that has nothing to do with the chip sector,
right?
But it's retail. Amazon, right, is trading right up there. Microsoft is another one. You know, so what you're looking at is a broad-based, broad-reaching consumer discretionary. You're looking at
Healthcare,
consumer, and you're looking at defensive sectors also making highs. So what's happening here is that you're seeing a rotation in the pattern on top of decent economic data. The GDP print today was pretty good.
Yep, very good.
Right, and you're looking at Goldilocks economy. So you got low unemployment, rising wages, personal consumption could have been a little bit better over the week, but you have a couple of mixed signs in there. But all in all, it points to still a strong economy, just a little bit of slowing, which is fine because you can't go at a breakneck pace all the time. Right. And the 10-year note is a good, 10-year yield on the bond is a good thing. It's at 2.5%. It's a good indicator as well. A low VIX, low trading volume, 2.5% on the yield, a rotation in sector showing you that you probably got legs in the market.
All right, quickly, let's take a look at the trading week ahead. I will not be at MarketSite. I will be gone. I'll be in Texas. We're going to be covering the InvestNet Advisor Summit, so kind of excited to spend some time with the advisors and get away from the charts for a little bit. So we'll be there May 1st and 2nd. Adina, our CEO, she will be giving the keynote on May 1st. So a lot of exciting things going on in Texas next week. You will be at the helm. What can we look forward to?
It is a big week for earnings next week and a big week for economic data. This is going to be the crux of what we're looking for. You've got over 160 S&P 500 companies reporting earnings. You've got almost a third of the Russell 3000, not just the Russell 2000, which is a smaller cap, but the 3000. So all of these companies reporting earnings. You got the Fed speaking. Remember, every meeting's a live meeting. You got non-farm payroll on Friday. Are wages going to continue to uptick? What is that number going to be? Is it going to be another wild number? Are we going to have revisions going back? You've got so much going into next week that everyone's eye is going to be on the market as a whole, from specific stocks capturing alpha. Does Apple, Google, do they move us forward? Do they hold us back? Do they continue trend as is? And everybody else behind it, where is this market going to be? Are we going to continue to make higher highs, or are we going to fall flat on our face?
All right, you've got a bunch of IPOs next week too.
We do.
Have some more members coming to the Nasdaq family.
We've got a full week next week of IPOs, which we'll be doing right here. Thursday and Friday in particular is going to be a number. We're going to be doing 4 separate IPO auctions right here on Nasdaq. I'll be doing 2 of them. My partner Jay will be doing a couple as well. It's going to be a lot of fun. Definitely tune into the network.
All right.
It's a lot of fun.
Buckle up. Market Intelligence X. You guys are going to be busy.
Next week.
As always, Chris, thank you. Thanks. And thanks for joining us on Trade Talks. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.